It's been a very big week for Nigeria where you had the big earnings from Stanbic, from Dangote Cement, from Lafarge, and from others. So, what about the debt market side? And that's what Ayodeji Ebo, the head of a retail investment at Chapel Hill, Denham, is chatting to me about this evening. Good evening, my friend. Welcome to the show.
Good evening, Dwasin, and thanks for having me.
It's very interesting. What were the key highlights of this week on the debt market side? Because it looks like Dangote and Lafarge took a shine off the debt market with those big numbers.
Okay, interestingly, this week, the major highlight was the Debt Management Office March bond auction. So we saw a significant subscription of over 300 billion. The DMO offered the 2025, 2037 and 2045 bonds for 50 billion naira each. And when you look at what was sold at the end of the day was a total of about 262 billion, which is about 1.7 times what was offered. We also saw a bid to cover ratio of close to about 2.4 times. So which shows that there's a lot of interest. But the most interesting thing about it is we saw a gradual, it sustained that shift in terms of improvement in yields, which is also positive for the investor. So we saw the yields for the 2025 increased by, and 2037 both increased by about 20 basis points to about 10.8 and 11.5 respectively. We saw the 2045 touch the 12% psychological line. So it's positive news for investors, because when you also compare that with the rising inflation rate currently at 17.3% as of February, that provides some form of comfort for investors. And we expect that this trend will still be sustained. So coming to the news on Dangote's approval for 300 billion bond offer. Yes, it's a positive one. If you look at last year, about 1 trillion naira was raised in form of corporate bonds as well as commercial paper. And that helped support some of the cash flow, the working capital, as well as for expansion. So with Dangote Cement coming up with this series of about 300 billion, we feel that it's positive. But looking at the rating, has a very high rating, and we believe that with the improvement in yields, it means it will be a bit expensive. When you look at the last bond auction, it was that Dangote have 100 billion was issued about 12.5%. So now when we have yields already approaching around 11% at the mid level, around 11.5% at the mid level rather, yes. It means that then we're expecting there will be a premium. So it may be more expensive than the last, and also looking at expectation, because it also helps it helps investors' expectations. So when you expect that yields will continue to increase, then we will feel that the investors would need significant premium, so that they don't just lock in for another maybe 5 years or 7 years. The details of the bonds is yet to be announced
to the market. Yes, Ayodeji, just a quick one before we wrap it up. We had the Monetary Policy Committee meeting this week, but are there macroeconomic news or developments you're watching at Chapel Hill that will help you decide why investors should play in the debt market in the coming days and weeks?
I think interesting question. Our eyes will continue to be on inflation, because because of its impact on investors' savings, as well as their investment. So we're looking out for what government's decision would be regarding the petroleum subsidy, which would have a significant impact. We also expect the energy prices may also be reviewed this year, may also have significant impact on inflation. So, and if we will see inflation increasing, we know, yes, food inflation has been the major cause for the rise. And if we don't tackle insecurity, that may also continue to increase, then investors will continue to ask for higher yield, because they will also want to cover the gap. Last year, it was a different structure because we had significant liquidity in the system. So it was like a supplier's market last year. But now that when you look at the liquidity, so investors are quoting higher rates. And you also look at from the CBN angle, OMO auctions, CBN has increased, that's around January, increased the rates by close to from 5% to about 10%. That also sent a signal to the market. So our highs will be on inflation. We'll also see how government is able to handle the issue of the PM in terms of subsidy because of its impact that it will have on general prices.
Ayodeji Ebo, Head Retail Investment at Chapel Hill, Denham. Thank you very much for your time. Have a great weekend.